Robert Kiyosaki began to talk about some of his ideas by putting them in the form of questions. Right now, he's asking, are you worried about your job or business? What's going to happen? You can start to think about the answers as we talk. Most people only pay attention to the stock market and don't know much about how much homes cost in their area, which isn't good enough. George Gammon is the name of our guest today. He takes things that are very hard to understand and makes them easier for a simple mind to grasp. George Gammon wants everyone who sees this video to know how important it is to understand the big picture of the economy after the COVID experience and not to make it too hard. Some people think that the reason why some people think it is hard is that all these economists and academics use all this jargon and technical terms. But if you break it down into plain English, it is really not that hard to understand. If they understand it, they'll be able to make better financial decisions for themselves and their families in the future. So we should all make sure to really pay attention to what's going on. Let's say that you have been saving your money, working hard, and doing everything right with your money. You want to save money, but when you go to the bank, you find that they only give you 0.5% or no interest. Interest is so low these days. So now you might be thinking, where can I go to get a slightly higher return while still being safe? So you might look at something like a money market mutual fund and think, is this safe? All my friends are doing it, and it seems like a bank account, but maybe I can get a 1.5% return. What the average consumer doesn't comprehend, according to Robert Kiyosaki, is that they are actually risking an exponentially higher risk simply to achieve that 1% greater return. So at this point, you are probably wondering, how is that even possible? Because the money market mutual fund puts your hard-earned money and savings into the repo market in order to generate the additional return. This is how the fund is able to offer you the additional return. They entered it into the commercial paper market, which is essentially a source of financing for businesses. The question then becomes, what would an ordinary person who is just living an ordinary life, watching the Monday night football game and just enjoying his life with his family, living in a house with a white picket fence, having 2 children and a golden retriever who doesn't care about what's going on with the plumbing or about the dollar swaps do? But is it really the person's intention to trust their life's work and money to a financial institution like HSBC or Deutsche Bank? Would it be in that person's best interest to have their money lent to American Airlines at this time? This is how macroeconomics, cash flow, and plumbing work, all of which his friend Robert Kiyosaki also discusses. That is how the manner of life of the average individual can be altered by following only one path. Robert Kiyosaki posed the following question to George Gammon. If our banks are failing right now, what does that entail? In response, George Gammon explained that the entire economy, not just the financial institutions, is in a state of collapse right now. This includes both the public and private sectors, because each round of these debt cycles can take anywhere from 75 to 100 years to complete. Let's revisit what Ray Dalio said about how we're currently at the peak of a long-term debt cycle that might last anywhere from 75 to 100 years. Therefore, the only direction to travel from here is downward. Keep in mind that Robert Kiyosaki had the ability to know what was going to happen and had kind of foreseen this already. However, once you reach the peak of one of these debt cycles, the only option left for the government is to choose between one of the 4 possible courses of action. First and foremost, they have the option of choosing austerity, which is something that very few governments really do. That indicates that they need to be spending less money in order to tighten their belts. The suffering is shared by all. Consider the drastic drop in prices that occurred during the Great Depression of the 1930s. They modified the terms of the debt. Due to the fact that they are the creditors, it is highly unlikely that we will do that with China or with the major banks. What the majority of governments do is instead choose to print their own currency. This results in inflation, which is then used to save all of the people who are in debt, whether those people be in government or individuals. Consequently, what does this imply for the typical person? Well, if the government is going to try to generate inflation, which simply means an increase in the price of goods and services, then what you want to do is make sure that you're positioned for it. You can do this by making sure that you have enough savings. So, if you just bought your own home, for example, you need to make sure you have a 30-year-old fixed-rate mortgage. Because if they try to make inflation, your interest rate will go up unless your rate is fixed. And if you're in debt and they cause inflation, you'll be able to pay back your loan or mortgage with devalued dollars that are cheaper. So they can think about it this way. If they borrow, say $100,000, the rate of interest means that when they pay back the bank, they have more money to spend because they have to pay back both the principal and the interest. Inflation, on the other hand, makes it possible for the borrower to pay back the debt with less money. So, if your interest rate is, say, 1% or 3%, but inflation goes up to 5.6%, the difference between those two numbers is a transfer of buying power from the bank to the individual homeowner. He thinks that a lot of people who are listening probably have a mortgage, either on their own home or on a rental property. He thinks that's the first step toward being proactive. That works for gold, silver, and Bitcoin too, because we always talk about it. The interviewer, Miss Kim, asked, "We're sitting here on this coronavirus, which is changing everything. What is your crystal ball? What do you see?" She said, "It's not your crystal ball, because you're studying it and seeing all the charts and numbers. So what are we looking at?" George Gammon answered that from an economic standpoint for the average person, he thinks they just have to look at the entire economy as supply and demand, so the supply is how much stuff we produce. How much goods and services cost depends on how much money we have, how willing we are to buy them, and how easy it is for us to borrow money. So as most people know, we're in lockdown, depending on what state you live in and what city, so there's a lot less demand. There are a lot of fewer goods and services that are actually being purchased, so that decreases the demand equation. Most people focus on this and think, okay, we just need prices to go down. They forget about the supply side of the equation, though, because if people can go out and make goods and services, the supply will go down quickly as well. So then the question is whether demand or supply is going down faster. Then you should look at how the supply chains that bring goods into the United States have been broken. Most of the things you see on the shelves at Walmart, Target, and Home Depot were made outside of the United States. So if these supply chains get messed up, there will be less. Back to Ray Dalio's example of long-term debt cycles. What usually happens next is social unrest. Most of the time, when there is social unrest, politicians use helicopter money to calm things down. So it doesn't matter whether you call it MMT or UBI. It's basically the government spending money in the real economy to put money in people's pockets. In the future, it's possible that the Fed will be the one to do it. Technically, they shouldn't be doing it right now, but they've been breaking every rule. So if the average person has more money, even though they're not going to work, that means there's more demand for goods and services in the economy that don't require debt. That's the key, because most people think that deflation and inflation are just two sides of the same coin. It's either one or the other, but there are a lot of shades of gray. So, if there is less debt in the system, the prices of cars and other things that most people buy with debt could go down. But the prices of most things people buy every day that doesn't require debt, like groceries, tend to go up. The other day, he saw on CNBC that food prices in many places in the United States have gone up by as much as 25%. It is already becoming clear that this is really going on. Robert Kiyosaki agreed with George Gammon that what's happening is that meat packing companies are closing down because of the COVID. So there are now shortages of meat, which is a great example of how supply is failing faster than demand. This is happening because the Fed is pumping trillions of dollars into the economy, so there is less supply and more money in circulation. Because of this, the shelves are empty of pork, beef, and other basic foods. And Robert Kiyosaki shouldn't forget that the Arab Spring, which happened in 2011, wasn't about Muslims or Christians. All of this Arab Spring happened because food prices went up so much that people couldn't afford to go to the store. Robert Kiyosaki agreed with what George Gammon said, which is that the social situation gets worse when people are hungry or can't buy food. What are your thoughts about this?